Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. This one's going to be a little different. When I scour the internet for cryptocurrency information and exactly what's happening in the cryptocurrency space, I sometimes stumble across articles that I find to be incredibly interesting, not only because of how they're written, but because of what they say and because who they are geared towards. This is an article written by Katina Stefanova. Do not know her, but I definitely love exactly every single thing that she said. And the main reason is that I found this on Forbes. Forbes is a leading website magazine that is particularly or 195% geared to the richest people in the entire world. And I think there's a direct correlation between exactly where cryptocurrency is going to go, where it is right now, the future of it, and who it is being marketed to right now, and the people who are going to have the most benefit from it, if I can kind of say that. So without further ado, I'm going to read through this, and I'll obviously at some point give you my take on certain things. But everything that she says is almost completely spot on. To the point that it's a bit eerie, and once again, pay attention to who this is focusing to. The reason that I made this channel in particular is that I wanted to make sure that normal, everyday people knew about cryptocurrencies, realized that it was something that they could also get into, that it is not just for the very rich. A lot of people, even many years ago, were asking me how to get into cryptocurrencies, and they were afraid to get into Bitcoin because of the price of Bitcoin. That is buying one whole Bitcoin, and you tell them that you can buy fractional Bitcoin, and their eyes kind of light up because they realize that they also have a chance to be able to get into the market that at some point in their lives they assumed was only for people who were very, very rich. So like I said, without further ado, let's jump into it. It says, despite this year's bloodbath in the crypto asset space, the industry will likely still generate considerable investor surplus in the long run. In fact, an investment in a basket of the top crypto assets, largely Bitcoin, has the best chance to deliver the most attractive risk-adjusted returns over the next 10 years, compared to less controversial favorites such as Amazon stock, 10-year treasuries, and an apartment in Manhattan, or other large consensus longs. While the bull thesis for crypto assets is far more nuanced than can be covered in a short article, we outlined 4 of the most salient themes below. Here's a chart of the Bitcoin price as we've been having over the course of this year. It says Bitcoin is a rare, unlevered asset in a levered world. Global debt has reached $250 trillion, 70 trillion higher than in 2008 when we had the last market crash. The US runs a $1 trillion deficit. Pension funds are underfunded amidst retiring populations. A student debt has snowballed to $1.5 trillion in the United States, with 9 out of 10 borrowers struggling to make payments. All of this puts pressure on central banks to print excessively into the foreseeable future, diluting the value of fiat currency. Smart money, and increasingly just more money, will flock to unlevered assets that have limited supply, such as gold, Bitcoin, or other alternative assets that aren't part of the mainstream investment world. Traditional assets such as equities and government corporate bonds and real estate are highly levered. For those who are unaware of what's been happening in the world the last couple of years has been actually completely terrifying, and I think that it's almost said it's undervalued. And people aren't really understanding exactly what's been happening in the world. The amount of debt that we have right now is completely unsustainable. Countries around the world are not paying other countries back in the debt that they are owed, and at some point the world will buckle. It's a number game. We know that we won't get to 45 quadrillion dollars in world debt, and the world will still be ticking along. We have a huge problem, even if we just focus specifically on the United States at the moment. There's a huge reckoning that many people believe is going to come. People have been calling for this since around like 2005, 2006. Even as the stock market was completely shooting up and making record highs in around 2008 when we had the stock market crash. A lot of people were calling for it again, saying that something is inherently wrong with this entire system. And then we had something around 2009, 2010, where central banks were simply just printing money and throwing them at the other banks, telling them it's okay, it's all going to be better. Nothing that happened in 2008 has been fixed. Money has been placed on top of it. And a lot of people believe that we are setting ourselves up for another stock market crash. But this one will, analysts are saying, or so the saying goes, that will be even worse than the previous Great Depression. And I don't mean like the one that we had in 2008. I mean like in the early 1900s where people were jumping out of windows and stuff like that. Like, nothing has been fixed. And this is why it's very interesting that Bitcoin has come around at a time when the world seemingly needs it the most. Further, from a portfolio theory perspective, it says Bitcoin is an asset that is non-correlated. Yes, it is volatile, but volatility that is unrelated to fiat investments, and therefore a true method of diversification that boosts the overall portfolio's risks, reward, and with plenty of upside that is premised on secular and defensible trends. The story of humans is a story of networks where throughout thousands of years of history, we organize ourselves into networks which we could get things done. Cooperation across boundaries has produced nations, businesses, and other crucial institutions. It says, if you put a king in charge, you pave the way for a tyrant. If you put an elite in charge, you create an unfair aristocracy. If you put a corporation in charge, you get a rent-seeking monopoly. If you put a central bank in charge, it will manage money supply to optimize the health of its own currency and balance sheet, not to benefit of the individual saver or investor. A misaligned central bank may be incentivized to protect itself by devaluing your savings, which is something that we've seen many, many times over. At the same time, we have open protocols in which participants of a network can interoperate permissionlessly without a gatekeeper. The English language is an open protocol because it is not owned by anyone, kind of, if you want to say that. But unlike a pure democracy, these networks are not entirely flat. They are meritocracies. Meritocracies? Yeah, there we go. And the Bitcoin network, the more security they provide, the more Bitcoin you're paid, and the more say you have in the network's governance. In the Ethereum network, you get paid in Ether to verify computations. Blockchain-enabled systems are merit-based, peer-to-peer marketplaces that allow humans to continue to form valuable, efficient networks without relying on legacy gatekeepers. Once again, pay attention to who this is being geared towards. As a corollary to the last point, the technology now exists to have a financial network separate from the control of kings and central banks. Beyond this, crypto assets also democratizes access to capital for financially neglected pockets of the world outside of the Wall Street elite. Without going into technicals, blockchain technology combines software engineering, economies, behavioral psychology, and other fields to create an open, permissionless, and distributed ledger that anyone in the world can audit and access from anywhere. He talks about the main benefits of it. The most game-changing aspect of crypto assets is that it allows for automated channel of incentives. And if you can program incentives, you can start programming human behavior and ultimately remove the need for a trusted third party. This is why cryptocurrencies are so important, because for human history, it was impossible we always had to have typically some type of a third party to agree that the transaction had been valid, or that this is why we have like notaries and stuff like that to say that this thing has actually taken place. If you have just two people in a room when they're getting married, this is why these marriages aren't valid. You need to have a third person. Now it kind of makes sense why there's always a person validating the marriage and standing in the middle of them. Same exact thing comes from contracts. Everything else is this is the first thing that we've had in human history where computers or software has potentially allowed us to do things by ourselves. You can send money to someone else around the world, and you have thousands of other computers pretty much confirming at the exact same time that this thing has happened, that there isn't anyone who needs to mediate exactly that you are sending to someone, or to be able to say no, that you cannot send or do what you are trying to do with your own money. It says, take Bitcoin, for instance. It is faster, cheaper to send, inherently deflationary, easier to store and divide, and is a true non-correlated hedge. Unlike gold or the US dollar, it works on weekends. 24/7, 365 is judgment and censorship resistant, subject to no capital controls, bank restrictions, or frozen asset freezes. It is trustless in that a TTP is not necessary to handle your assets, and in the sense that you do not have to trust a government to preserve value on your behalf. It says, i.e., the Fed pumping trillions of dollars into the last recession to devalue the dollar, which also happened. India decommissioning certain bills, arbitrarily wiping out value. And Venezuela's current hyperinflation, which is, I think, sitting over 1,000,000%. There was just a documentary that came out 2 days ago. Venezuela is constantly in the news, and it's actually really sad. I mean, everything that's happening there. They were talking about, there was a person, he had an entire table. It was a long dinner table just full of bills. And he said, that's not even enough to go buy a box of cereal for me and my family. It was absolutely, completely insane, and this is only going to continue happening in other countries that we also have around the world. Right. So here's where it starts to get really interesting. It says blockchain's total addressable market, that is the market that blockchain could potentially absorb, or the TAM, includes all the disruptable markets dominated by TTPs. For instance, these are insurance, gambling, prediction markets to virtual real estate. We think that could be at least a third of the global GDP, $80 trillion, plus a non-trivial amount of global wealth around $300 trillion. And this is just one thing. This is just one aspect that this person is actually focusing on. If you look at videos online, or if you look at other graphs as to exactly how much money is out there, when you tell people one of the most interesting things that I found, and I've tried to explain in other videos before, and I know that I don't usually have a lot of time, or rather I try not to make the videos too excessively lengthy. And I guess at some point I probably should just kind of let go and provide as much information as possible without trying to make the videos too short or what have you, or talking too fast. People believe, or rather it is estimated, and not even believe, that when people talk about the price or the future prices of where Bitcoin or other cryptocurrencies can go, people tend to stop at the $1 trillion mark, as they say that's impossible. Bitcoin can never hit over a $1 trillion market cap. This can never happen to this coin. This can never happen to so and so. There isn't that much money in the world. The debt alone in the world is estimated to be in the trillions, and that doesn't even involve like the entire massive debt. Like, we know how much debt that governments kind of owe each other, but all debt, all money, everything that encompasses finance in the entire world that we have right now is believed to be several quadrillion dollars. That is the decimal place after we get finished with the trillions. And this is why I think they're only focusing on the $300 trillion mark, which completely sounds insane to the normal mind. But if you think about how much money and how much debt is actually out there, it's actually completely staggering. And this is one of the main arguments that we typically get for why Bitcoin and other cryptocurrencies in that same exact sentence are going to do very well in the future, simply because there's so much money that can be absorbed from other places, especially when you talk about the gold and silver market. It's widely believed by many people in cryptocurrencies and many other people who are also maybe even just in traditional finance that at some point the idea is going to be when fiat currencies are completely decimated and continue to devalue themselves, people are going to move to things like gold, silver, and cryptocurrencies. The issue is that when we get to a world that is completely digital, you need to send value across the world in a matter of seconds. It is probably not going to be as advantageous to take a piece of gold, strike it with a hammer until it breaks off into multiple chunks, put that into an envelope, and then send it to someone on the other side of the world. So the idea is that cryptocurrencies are going to absorb an enormous amount of money that's actually in gold and silver and other equities, and also even in some cases, maybe even real estate and land and other things like that. This is why we get the idea of Bitcoin as a store of value, but it also ties into the entire thing that not only will it be a store of value, but it'll also be a means of exchange. And we get to this point. There was an article that came out a couple of months ago. I've noted it many times in my videos that a Swiss, I want to say a Swiss bank, try and Google it. It was like $250,000 Bitcoin, and then type in like Swiss bank or something like that. You should be able to find the article. There was them saying that they think that by the time that one Bitcoin is worth $250,000 US, it will be large enough to be able to completely replace the US dollar. And now we have estimates that Bitcoin could eventually at some point end up hitting $1 million. And this is where we get this stabilization, if you will. You know, people put their money in theory into fiat currencies and into fiat money and into the US dollar, into euros, because it is stable. You take your money out of, I own a box of dirt. I'm going to sell that dirt and put it into the US dollar or to the euro because the value of it is stable. But when these currencies end up becoming unstable, the idea is that people will then put their money into cryptocurrencies, and the more money that is into cryptocurrencies, the more stable the prices will be. And this is why we also spoke about sometime over the summer. I was saying that these returns that we see right now in the cryptocurrency market aren't going to last forever. It is highly believed that at some point, when the crypto markets is in the multiple trillions, the returns that we will be getting on our money won't be the infamous 18,000% in 1 year. It'll probably be anywhere from 12% in the entire year. And at some point, if crypto, and specifically Bitcoin for this argument, does become worth over $500,000, we may potentially only then see around 2% returns a year. But this means that it is completely stable, and not only is it a stable account of value, but it can also then be used as a daily metric of payment. Yeah. So that kind of encompasses exactly what this one phrase right here means. It says, if you buy the premise that Bitcoin is better than gold based on this article and related links above, perhaps the TAM in an ultimate bull case is global wealth, or around $400 trillion in 10 years. And precisely, if Bitcoin takes just 2% of this TAM, just that, it would have an $8 trillion US dollar market cap versus the $150 billion that it is right now. It says if you have something that can potentially 50x, you must have 89% conviction that it's not going to happen for you to not put money into it, for those who don't get what that means. Many analysts have been chugging along the last year, even just the last year, as prices have been going down. We've seen an enormous amount of people get into the cryptocurrency space. One of the main things that people have been not perplexed about is that how much money is entering the cryptocurrency space over the counter while prices have been going down. Analysts are thinking that right now, if we have analysts talking about that Bitcoin could potentially hit $250,000, this is why it says if you have an asset that many people around the world are believing in, many other major institutions and financial places are putting their faith behind, especially with the people from the New York Stock Exchange talking about that they think that Bitcoin could be a global currency. When you have something that can potentially 50x, you have to be certain that it's not going to happen, that Bitcoin is going back down to zero for you not to put money in it. This is why we have so many, and one of the most interesting cases that I think that I've seen is Mr. Jamie Dimon, who is the head of, I'm not sure if he's the CEO. He's the head of JP Morgan Chase. For years, all he did was talk trash about cryptocurrencies and how he couldn't stand them and how he hated them and how he hated Bitcoin. Bitcoin was completely useless. And then lo and behold, in 2017, 2018, we find out that he's been buying Bitcoin all along. There was a podcast a couple of months ago. There was this person, they said they had to, stay in the shadows, or they couldn't exactly reveal exactly who they were. They said they were working for JP Morgan Chase, and at some point the company, they got a letter. And it's like, if you are dealing in cryptocurrencies, you will be fired if you are so and so and so. And then the guy said that there were other people in the office, in the building, if you will, who were getting other letters because they were really good at trading, and they were being told, or rather asked, how to accumulate more cryptocurrencies. During the same exact times when Jamie Dimon would go into the news, the head of JP Morgan Chase, and talk about how much he hated cryptocurrencies, all these people have been accumulating. So if you are not investing in cryptocurrencies, this is not financial advice. Side note, you better be gosh darn sure that Bitcoin is going to zero if you are not going to be putting money inside of it. It says oftentimes people look at investing in crypto assets as this binary concept. Do I invest given the asymmetric upside, or do I invest because it's vaporware that could go to zero? This is a false dilemma. The reconciler is simply a matter of sizing. One must ask themselves, is it worth putting $1 into the cryptocurrency space? The answer is undoubtedly yes. How about $2, $3, $4, and you go from there. She finishes it off by saying, we believe every well-balanced portfolio includes a crypto asset allocation, and the only question is one of sizing. Remember who this article is for, who this entire website, who this entire brand is. The first tab here says billionaires. This is for the global elite. These articles are made for the very rich. Many moons ago, when I got into cryptocurrency, I don't even remember when I made this video. It was telling people to get into cryptocurrencies, and I think people thought I was just joking or just lying or something like that. This was like, it had to be about 2, 3, 4 years ago at this point. I don't even think I have that cryptocurrency channel anymore. Like when I was talking about like the other channel that I had on finance. The point is, crypto is well poised to take over at this point. I think it's interesting that a lot of people don't see it. I think that a lot of people aren't reacting to it. I mean, the way that I kind of see things is that if you, I have to, you can't tell people what to do with their money. And I struggle with this many times on this channel. If you see any future prospects, you yourself, after having done your own research on the cryptocurrency space, I think it could be advantageous for you to potentially look into putting money into the cryptocurrency markets. I think that's the easiest way of me saying it. Cryptocurrencies have completely outperformed every other asset that we've had. I don't have the exact number of exactly the what's it called, like the percentage of how much Bitcoin has gone up since the last 10 years. It's completely dominated everything that we have out there. And the fact that we have articles like this, the fact that we have Forbes, Fidelity, the New York Stock Exchange, NASDAQ, like they all have like Yahoo Finance, they all have cryptocurrency and Bitcoin price tickers. Like, I don't think crypto is going anywhere. I think crypto has an incredibly large future. One of my main issues that I have at the moment is that the people who should be in cryptocurrencies aren't in cryptocurrencies. Not to end it on like a weird like sci-fi note, but if we do end up having a point in the future where Bitcoin does become this global currency and people can use it and we have the Lightning Network fully active, and I mean, we have like $1 million Bitcoin, what would be the problem with you putting $60 into the market right now? Once again, not financial advice. I have to continuously reiterate that because a lot of people, I think, just don't get what I'm saying. The point is, I am extremely bullish on this market. You have to see exactly what's happening with everything, the money that's going into it. The fact that markets haven't really reacted to this right now is still extremely surprising to me. Anyway, I think that's going to do it for this video. I do thank Katina Stefanova, don't know her, for her article though. I love articles like this. It gives a bit more insight into exactly what is entirely possible in the cryptocurrency space. I think a lot of people, not that they're short-sighted, a lot of people who may not have been into finance before don't have a clear exact amount of how much money there actually is floating around in the world. Money is not just all in your bank account or dollars and euros that you have inside of your wallet. It's also in debt. And a lot of these things can be completely just moved around. It's just numbers on a screen. But what happens when all of those numbers and other assets begin to be sold and they are then poured into the cryptocurrency space? Hope you all enjoyed. Hope you all are having a great day, morning, afternoon, and or evening, wherever you are, wherever you might be. I hope it's absolutely fantastic. Thank you once again for watching and or listening. I do appreciate it. And yeah, I'll talk to you all soon. See you.